Hello traders, today I want to show you how to analyze a chart in a fractal way with a simple trend line and resistance lines. As you can see, we have a gold versus US dollars, and we're in a kind of an uptrend. This is a 15-minute chart. The first thing I do, I always determine or look at the beginning of the trend, and I mark the beginning of the trend, which in this case is down here. After this, I just connect the highs and lows. Pretty simple stuff. From low to high, from high to low, just like that. I want to see the market in waves. I don't look at the single candlestick patterns. Maybe some of you do. I don't. When I have these highs and lows, I can draw some pretty good trend lines and support and resistance lines. So this is my main trend line, and then I decide the high and the low of the current wave to see where the market is. Because I analyze the chart in a fractal way, and a fractal means that I take a portion of the higher time frame or higher fractal and take it and go to the lower time frame and find the best entry point. In this higher time frame, I want my indicators show that either the market is either I can sell the market or buy the market. Right now, I think because the stochastic is on 20, but my MACD is crossed low, crossed down. I'm not in a good position. I want both of these at the same direction. If this crosses up, going upward, I want my stochastic below and crossing up. So at the moment, I don't trade. But let's see what happens if we do. I put another line where the stochastic it just crosses up. That's the low of the stochastic. So I take this area and I go to the lower chart, the lower time frame. Go to the 1 minute chart. All right, let me delete this. If I can find it. So I have to pause the video to find the rectangle. So I deleted the rectangle. Now, because my stochastic at the higher time frame was going up, I'm gonna buy the market generally. But because my MACD was crossing down, I just don't do anything at the moment. But just let's say we want to buy the market. Let's say our MACD was going up. In the lower time frame, we're gonna do the same thing. Our MACD crosses upward, and then we wait until our stochastic goes down under 20, and then we buy. Right now, we don't have any entry. But I want to go up again and find a good one in the previous time. See, if I drag this line to the previous high, see stochastic is at the top and my MACD is almost crossing upward, but it's going downward. Let's see if in the lower time frame we could find another entry in 1 minute. We do the same thing. We draw a trend line. This is our beginning of the trend, and then the trend line breaks. I'm going to mark these highs and lows, and then crashes down. When here the price breaks the trend line and it goes down all the way. As you can see, our MACD crosses down and then crosses the zero line. Wherever and whenever the stochastic comes up, which is here, we can sell the market. Let me delete these lines so you can see. At this line, you can sell the market almost here. Our moving average is crossed downward. Our MACD is crossed the zero line. Our stochastic came back up, is above 80, and then we sell the market. Now there are target and stop losses and all that stuff. Where do you put the stop loss? I put the stop loss at the previous high before the price breaks the trend line, which is up here. My target, I measure this high and low. I always work with highs and lows. And I generally trade in the middle of that. And then I measure from the bottom of the previous wave and I mark the bottom of this line, which is exactly the same as the previous high and low measure. That's my target. That's my entry here. And my stop loss is up there. Let's measure to see how much is our reward to risk ratio. If I enter at this line, which is the middle of the wave, my stop loss is up there, which is 50, let's say 57. I put another a little bit higher. So I put it at this line plus the spread, which is 60. So my stop loss is 60 pips. All the way down here is 180. So my reward to risk is 3 to 1. I'm going to risk 1 to get 3. Pretty good. As soon as the price hits the previous low and it goes a little bit lower, I drag my stop loss. Let's say, let me put a line here. This is the previous low, right? Here. When the price crosses this downward, gets to that point, I move my stop loss almost to the break even, a little bit lower. And I leave the market, leave the price to goes all the way to hit the target. I don't touch the trailing, I don't trail the stop loss. I don't do that. I just, as long as it's in break even, I know that I'm not gonna lose that any money on that trade. Even if the market goes back up, the price hits my stop loss, I'm not gonna lose anything. I'll wait for the next trade. So I'm good. But I let the market fluctuates until it hits my target. So I'm good. This is how you can analyze a chart in a fractal way. You find a very good position, a very good entry point in the higher time frame, in the higher fractal. You take that part, only that section, you take it to the lower part, lower fractal, lower time frame, and you pinpoint your entry. At the exact point you can enter, and you can be almost sure, well, it's a probability of like 70%, 80%, whatever your win rate is. Because you have a 3 to 1 reward to risk and your probability is above 70 to 80%, you can have a very good trading system with this kind of analysis. You don't need to look at the chart patterns, you don't need to look at the candlestick pattern, nothing. You just have highs and lows, trend lines, and support and resistance lines. With the help of a couple of standard MACD and stochastic and a couple of moving averages, you can do very good in trading. You just wait until you have a very good trend. You draw your trend line, you determine your highs and lows, and then you just do this setup. I want you to go back and back test this system historically, maybe 100, 150 trades, and record what is your win rate and how much you can get, or what is your reward to risk ratio. I've done that. My win rate was above 80%. Your actual number is going to be different based on how you trade emotionally. Are you ready? Or, you know, real money and real trade is different from the back testing. But as long as you know that you have a 70%, 80% chance of winning, and you have a 3-to-1 reward to risk ratio, you're pretty solid and you can have a very good trading system. I hope you enjoyed this video, and I hope you go and back test. And please, if you do back testing, let me know in the comments what was your result. If you have done any trade with this system, please let me know. I want to know how you did it. What was your money management? How much you made money or not? Or is there any problem with this system? Please let me know in the comments. I'd like to hear from you. And if you've watched all the way up to here end of the video, and I hope you liked it, please subscribe to my channel if you want. If you want me to have more videos, and if you like the video, please like it. Thank you so much. Have a great time.